With that, let's welcome our market master of the morning, Sriram, Managing Director and Head of Research at HSBC India, joins us. Good morning, Sriram. Thank you very much for joining in. It's such a confusing market and also a little bit despondent for an Indian investor that a market master is most welcome. Well, for starters, do you think we have fallen enough? It's a good 11% fall from recent highs or from all-time highs. Do you think this market has the potential to get much lower?
Good morning to all your viewers and to both of you in the studio. Well, in terms of the market level, see, I think market's clearly at a level where it is probably, we are calling for a flat market into the year end at this point of time. So I would say it's probably close to its fair valuations. But I must confess that there are a couple of red flags which, I'm no soothsayer, but one part could be that in case the monsoon disappoints as the IMD and various other agencies have forecasted, then there is obviously some kind of downside risk that could open up on markets. The second could be on what happens elsewhere kind of a trade. There is a lot of speculation about whether China A shares could become part of indices and so on and so forth. And, we had commented on it some time back that if there is a part inclusion, it could mean about $5 billion of inflows into that market. If that goes up to, say, a full inclusion, the range could be as high as maybe even about $50 billion. So it could mean that you could see some money moving out of other markets then into those markets on the passive pools of money. So those are events beyond our ability to guesstimate in that regard. So you could have a situation where those risks could open up a little bit more outflows and maybe the market drifts down. But from a fundamental standpoint, I would say broadly, we would be more comfortable with saying that, okay, it's more like a flat market into the year end now.
Okay, so flat market into the year end, so don't expect too much by way of returns. But what about the fact that a lot of money has perhaps been moving out of India and into China? That's the sense that we get from a lot of experts. Do you see that situation continue, or do you see that trend reverse because of how overheated China has become?
Well, China, I would, I mean, it still remains to be seen how much, valuations are still not as expensive as what you have relative to our market at this point. And at the same time, you also have an issue in terms of what happens to the passive pools of money. Now, the inclusion of these A shares into the indices could actually lead to a lot more of higher weightages for the market then. Then automatically the passive trackers will start moving money elsewhere. So I don't think that would be dictated too much by, their perception of overheating or maybe whatever the valuation the market is trading at. So that remains to be seen. I don't really know how MSCI or various other index manufacturers are going to play it out. I guess that clarity will emerge only over the course of next month and a half, but that is definitely one other red flag apart from the monsoons for our market. Which could lead to some outflows in case those events were to happen.
Okay. Well, let's look at some sectoral issues as well. We've seen this ever-shining pharma sector now begin to show cracks. At least the performance, both stocks as well as earnings, was nothing to write home. Will that be a safe haven now when you see flat markets, or do you think that will give way?
Well, from a sector-wise positioning, we have been underweight the pharmaceutical sector for about 2 months now. And partly it was more because of overheated valuations. It's not so much of an earnings call, it's just that the sector valuations have probably gone, maybe even exceeded one standard deviation about historical means and stuff. So to that extent, it did look a little overheated to us. I mean, just to put it in perspective, the pharma sector weightage in various indices locally as well has probably doubled in the last 4 years. So it is sitting on a lot of performance, and obviously that means expectations have gone up for the sector, which raises the risk profile. And then you had, a big block trade in Sun as well, which has probably fueled or fulfilled a lot of appetite for investors in the pharmaceutical space as a foreign direct investor got out and portfolio investors came into the name. So it's taken out a lot of appetite as well. But Having said that, I would say that, okay, results per se, we are not seeing too much of weakness going forward. You know, there were certain one-off issues with some companies in terms of taking some merger accounting related losses, like for example, a Sunrun Baxi merger and so on, which are not likely to recur. And there are a bunch of exciting drugs over on the anvil, which could make individual stocks look more interesting over a period of time.
Okay. What's your view on the telecom space, Jitendra? Because we've seen, you know, a fair amount of resilience, and in fact, as of today, the telecom stocks are actually outperforming the market. Would you recommend buying there?
We are constructive on a name like Bharti there. See, there are multiple things that are happening. One is you're finally seeing the telco starting to roll out 4G operations now. You know, I see a lot of press media ads from these telcos now, pitching for the 4G architecture. The second part is that data is clearly on a hockey stick in India, which, you know, the smartphone usage, the penetration of smartphones, that ecosystem is slowly starting to evolve. And it is starting to show up in terms of rapid surge in data revenues for all the telcos. So I would say that at least from a period, you know, telcos used to be a sector which saw the maximum earnings downgrades through the period of 11, 12, 13. I guess that phase is now going out, where earnings are starting to stabilize. You're slowly starting to see a small amount of RPM or revenue per minute improvements on the customer base, and you're starting to see data starting to take off. So we would be constructive on that space.
Okay. What about IT? Even there were cracks in the fourth quarter performance, though of course Infosys now is making some very bold noises. The other stocks did disappoint in their earnings. Will IT also form an equal or rising part of your portfolio?
No, actually, that's another space we are underweight on at this point of time. It is the largest sector right now in India, as per MSCI classifications. So clearly, I would probably argue that you know, growth from a overall perspective is still quite anemic in that sector. So we would tend to be quite selective in terms of our picks there. So it's not that you know, we are overall very constructive about that space at this point of time.
Okay. You are bullish